Hello, active traders, and welcome to our Trading Week Ahead live broadcast. I'm Ken Calhoun, coming at you live here from California, looking at some of the very top charts to help you make smart, informed trading decisions in the upcoming week ahead. Now, do feel free to post one or two tickers of a favorite stock or ETF that you'd like me to take a look at, and we'll take a look at the chart and see if it's worth trading and using my techniques, and also what some specific entry and exit points and stops might be. So I always like to focus on what works, and so I'm here for you guys. So let's get underway here with our S&P. One thing I want you to look at is, this is our spiders. This is a multi-month chart. One of the things we've noticed lately is that we've got a continuous run and pullbacks that are very unpredictable. And what that means to you as a trader is it's very difficult to sometimes make sure you're on the right side of the trade, and you get a false breakout and it goes against you. So what are some of the things you can put in your favor? Obviously, volume. Another is timing. And in one of my keynotes, one of my trading speakers last week at our America's Top Traders event that I host and run was talking about the importance of timing. And it's Anka Metcalf from Trade Out Loud, and she's right. Timing is really important for swing trading as well. One of the things I want you to start doing as an active trader is use pure price action and look at the ranges or the length of the runs. We're always looking at data sets as a representative sample of what's likely to come. You know, the best predictor of future behavior is past behavior, except when it comes to the stock market and other things. But I know actually looking at the range, look at the range of how far does it run before it stops and pivots. What's the characteristic of the nature of the candles? Are they mostly green? Are they mostly red? What's the magnitude of the trend? Is it straight up, which is kind of tentative and thin and may drop? Is it too slow of a grind? It's kind of choppy grind, or is it a nice 45-degree angle, perfect breakout? Knowing the difference between those can make all the difference in the world in your personal success. So, for example, our S&P, the most recent signal is a good, strong, sustained 2-week-long stretch here, week before last, right? This past week, though, we've kind of gone sideways. So I wouldn't be too bullish on the market to buy into new swing trades unless we get over that 5,800 level and stay over there in the S&P. You may notice, of course, there is who can tell me that that candle which exactly nailed the top of the market? Speaking of which, my colleague Steve Nissen and I are going to be doing an event on October 24th. So I want you guys to pencil that in. October 24th, Steve Nissen and I will be doing a live seminar for everyone as well. Anyway, that's a shooting star, right? Right. Thanks, Ian. Yeah, you got it. Hey, Damon. Hey, Beth, how you doing? Yes, that's a shooting star that correctly identified the exact top of the market. Did you notice that? I hope you did, right? All the candlestick traders, you guys that's an obvious, that's a gimme, right? It's what that's saying is sell me if I get under here, right? So sell, sell, sell. And sure enough, it dropped nicely. Now, whether or not it comes back to life, we'll see. But that was a sell, the loss of support was a sell signal. Very clear. That said, sell the market right there. I'm sure Steve would agree. In candlestick trader, well, I don't know if Steve would agree, but I think a shooting star loses support. That would be a good place to at least start lightening up on a trade if you're a position trader or a long-term swing trader. And if it loses support again, using horizontal support and so forth, you may want to continue to work out of the trade. So understanding how to use things like those candles in the proper market context is important. And from a momentum trader standpoint, the length of how far it runs before it stalls and drops is another key indicator that most professional quants or quantitative analysts and those of us who are technical traders do. So what else is exciting out here in Traderland? We had quite a few exciting charts, right? Now, personally, I don't like charts that are too exciting. I like ones that are nice and steady. I'd much rather have consistency, kind of like the character of a person, being honest and integrity. It goes consistently day after day. They don't blow up. They don't have explosive drama. There's no volatility. There's no judgment. There's just a professional trades. So one of the things I want you to look at when it comes to our current market is some of the differences and the delta between, gap runners that keep going and everything else, right? Also true, if you're trading highly volatile charts, like this one is TWG, it's Top Wealth Group Holding Limited. That's kind of, I won't call it a penny stock, but it's a relatively inexpensive stock. But I nailed the calls on this on the way up from 4.4 and it ran all up to $8. So I wouldn't say you could double your money, but personally, I sell on major pullbacks. So you could have done well with it, right? I started calling long at 4446 and 5 3. Then I trail a stop. TS means 5. TS, Tango Sierra means trail stop. So in my live room, the neat thing is once something started to run up, I tell people where to trail a stop at. So you have exact step-by-step guidance on how to manage a trade from start to finish. Okay. And so, to capitalize on that or to take advantage of what you can learn with me, I did put together a hopefully irresistible offer. It's money back guarantee, so no risk. Okay, so if you don't like it, tell me, I'll give you money back. I've got 1.6% refund rate lifetime for my business, so that's pretty good. So people tend to like what I teach. Anyway, 2 months for $297 plus. I'm going to throw in a half-hour coaching call with me personally for the first 20 of you, or anybody of you who calls in, and anybody of you who orders during my presentation now, that's fine. It's a 20 run out, and by the time I'm done, then I'll go back and edit that out. But for now, it's good. So if you do get your order in now, between now and the end of the presentation, in about 10 minutes, great. And so you get a free one-on-one 30-minute coaching call. Now we schedule those at a time that is mutually convenient, right? So we may put out a couple of times and figure out what's good, and we can get on the horn and I can answer any questions you might have. So that's another really good benefit to getting this. So it's only $297. Normally I charge is like $1K per hour for my Wall Street guys, institutional guys. So that would be a $500 retail trader's value for a bonus that's free. So it's a good deal. So that's at daytradinguniversity.com/summit. Now back to our regularly scheduled program. One of the things that I do like to point out to traders is that not only volume, but the range makes a huge difference in your potential trading success. That's because the bigger the range, the easier it is to trade. The narrower the range, the tougher it is to trade. So one of the first scanning criteria I look at in the live room each day for everyone is, what's the range? Is it a tradable range? Now, what do you think? Is this a tradable range? Oh, and at least 10%. Okay, at least 10%, and preferably a point or more. So this has 13 to 1650. So it's got a 2.5 point range, right? Well, 3.5 point range, 13 to 1650, 3.5. So 1450, 1650. So it's got a $3 range on a $15 stock. Sure, that's very tradable. Here's a strategy that you may not have thought of, and that's what I call buy the open, sell the close. We buy on the open during the 9:30 to 10 when it's moving around, jagging around, and you just hold on it and sit on it or put a trail stop on it and close it during the last half hour of the market. That way you can capitalize on opening range breakouts and not have to worry about getting stopped out or shaken out, because you let it do its gyrations all day long, bless its heart. You have a hard stop like right under your initial entry, so you are protected, of course, but you let it do its thing and then close it, whenever you want, sometime afternoon, and often, 3:30 or so might be a good time. So you don't have to worry about, getting stopped out on pullbacks. You buy the open, you sell the close. And that can gain maximum or close to maximum profits that position during the session. Here's an interesting one to keep on the radar for Monday, OPCH, that's Option Care Health. And in this health company, you can see it ran all the way from 28.8 up to 30. And this is another good technique that I teach is sell the nines, sell the 0.9 values right under whole numbers, and always sell into decades, right? Multiple of 10. So this is a good example of a chart that has that pattern, right? So if you bought right over 29 and sold right under 30, you've done just perfectly, right? So that's the kind of thing we're looking at is the volatility and also trading within point ranges. That's another very easy to remember technique, right? Buy right above a whole number, put the stop at say 0.9 right underneath it, and then sell into the buyers that come wherever they are until it gets up to 0.8, 0.9, and then trail a stop even tighter, locking the gain up there. That's another good strategy that I teach. Another interesting technique is to use what I call pair trading, or I don't call it, that's Wall Street. Pair trading, it's trading, going from a long bias instrument to a short bias instrument during reversals. And so, for example, SOXL is a long semiconductor, and we are calling, these are the actual calls I made yesterday for my live room members, right? And so bought in at 37.6, round up to 38, so almost 39. Whole number resistance, sell the nines. That just demonstrates perfectly the validity of my techniques, right? It's you sell the 9 and write your whole number. So that was a good run up from the 37.6, and I made these calls live for my members yesterday. So you don't want to miss out on this kind of stuff in the market, because I know my stuff. I know how to make good calls, and I guarantee it, that money back guarantee. So I guarantee you'll like the professionalism and the success rate, the win rate alerts. Now, what we aren't is a sewing circle or, oh, that's right. Yeah. Bright shiny object. Trader in the house. Another one's TVGN. Huh. Oh, for penny stocks, that's good. Again, sell the whole number, right? Sell right under whole number. Boom. I'll put that on the radar for Monday. We usually don't follow charts this cheap, but that one's a great chart, right? So why wouldn't I trade it, right? I'm a trader, I'm in it to make money, so I'm in it for the money. I like to make money. I like big bank accounts, you know, up almost 200%. Not too bad, not too bad. Anywho, so well, I will cover these on occasion, but very rare. Usually the cheapest I go is like $2 or $3 a share and up to maybe $30, $40 a share. Most of what I like to trade and cover are things in the teens and the 20s, you know, $12, $15, $18, $22 stock. So I've been trading for a quarter of a century, and that's my favorite because I don't like spending $80 a share. It takes up a lot of capital, and usually these under $2 charts are all over the map and it's kind of tough, but that would have been easy. So keeping on this one, the play would likely be a gap continuation. If on Monday, say it gaps up to say $1.15, $1.20 and starts a spike, I'm going to hit it there because it may well go up to, you know, whatever, 1.5 or close to 2. So from 30 cents to $1, tripled. Anyway, too bad we can't go back in time, right? And throw all our money out right there, but it's but at least we can learn. We learn from the past and we learn how to move forward with the strategies and the entry and exit parameters, the tips for exactly how to manage your trades. So that's what I like to do. Anyway, we got lots of good charts. So I think this one still has legs. That's Trump Media, right? DJT. Boom! And nailed the calls from the traders. It did really well. Anyway, it's a run over period of 25 from 19 back on Thursday. So it's been quite a good runner. DJT has good volatility as well. Let's see. Trying to think. Oh yeah, are there any tickers that you'd like me to pull up? Let me know. Someone's asking Snow. Let's see. If you have any tickers you'd like me to pull up. Oh, okay, Kat, thanks. Thanks, George. Oh, hey, Matt. Thanks, Joe. What else? Yeah, good point. Matt's saying chart analysis is by definition past analysis. Yeah, that's true. But the past has valuable clues, like what's the average trading range of the instruments? You don't buy an extended run, or what's the pivot points that it follows usually, you know, or does it usually bounce off the whole number like a lot of these do? Or is it something different? How far does it run before it stalls and drops? What's the depth of the cups? All that kind of stuff helps. So let's take a look at a few of the charts. Someone asked about Caterpillar. That's a good chart, but I don't buy stuff that's $400 a share, but it's a great looking chart. Applied Material. Now this one's come on tough times, right? Let's look at the weekly. Skyrocket up and came out. Well, that's interesting. AMAT. It'd been down to 20 and now it lit up here. Very interesting. Well, that's definitely a good one to consider for longs coming up. It feels like we're a little late to the party though, right? But still, the technical trade on this would be to buy the two, again, not a trade recommendation, would be to buy the breakout right above the 220, kind of like psychological resistance. We don't buy at like 220, but say I would buy 221 and put a buy stop at 221, and exit target would be the previous high. So, you know, over a week or 2 or 3. So by the 221, exit target would be around the 258. You know, we don't buy nines, but we sell nines. So buy the 221, sell the 257 or so, and maximum stop loss on this one you'd have to use is $4. So it's pretty big, but with that kind of a range, you know, 4 sticks. And a stick is street talk for $1. $4 range, that would make sense. So yeah, that's a good one. See, someone asked about snow. It actually looks like it may be a decent bounce. I am not a big fan of buying bounces in up markets. I'd rather just buy breakouts because I'm a breakout trader. I'm a professional. I'm a pro breakout trader. But that one does have the pattern. It has a kind of hammer. It's not quite a hammer. It'd be a hammer if it was at the very bottom, but it's got a bullish lower shadow. And it's part of a 2-candle progression sequence that I like, which is small followed by large whole body candle. So that's actually good. And trade management, I would hit the 131, hard stop at 128, exit target right under the 150. So I'd trade 131, sell 150, 147 or so, 148. So that'd be the round trip. And what you want to do is you don't just close out a position because it's gone as far as you think it's going to go, but you trail a stop there. One of the things that you'll notice that I do for everyone, and it really helped me improve my trading dramatically over many years, is to kind of forecast out visually how far, what I think the exit's really going to be. And the more you do that tens of thousands of times, you slowly over the years start to get better at it. And so that's why I'm really good at forecasting both entries and exits, because I've been watching the dang telescope now for 25 years and trading them. So it's all the millions of dollars with the stocks I've traded. The lessons learned are something that I think can really be a benefit. So at least thousands of traders have thought so. So that's good. This is S&P, obviously, in monster run. Looking good, right? Off the November lows. Now, with the election coming up, that kind of throws a monkey wrench into things because you always get pre and post election volatility, and the volatility can be up or down. So be ready to trade it. And so, I'm going to hit stocks as the market sells off and UVIX and so forth. And I hit stock sell if the market rallies, because that's a very good leveraged way to go long the market, at least the semiconductors, and way to go short if it drops. So always be prepared, always have a plan to keep you, at the ready for what's going on. Oh, CMI, I think. He was asking about CMI. If any of you have charts that you would like for me to pull up, feel free to do so. That's a good chart. But again, these are too expensive. Well, for my taste, I don't like it. I mean, I'd rather trade 10 $30 stocks than one $300 stock. But it's a great chart. I see nothing wrong with it whatsoever. It's a wonderful breakout. It's another thing that you've spotted, and thanks to Matt for spotting that. One of the things that I really like is that during a breakout, if you have at least 3 or 4 out of 5 candles are green, that's good. So if you have like 4 out of 5 are green, 1's red, or 5 out of 5, or in this case, 6 out of, well, this is 5 out of 5 is green, that's really good. If you have a multiple candle green and an uptrend, that's a nice rally by definition. So that's good. And again, where would we buy it? We closed around 338 and a quarter. I'd wait till 341, right? The noise, signal the noise. I'd expect between here and 340, that's risky. It's going to probably zigzag near the 40. So I don't want to buy right over 40. I want it to climb above the nearest whole number to keep me in a clean breakout. So the 330, so 341 would be an entry with hard stop around 338. Exit target right under 350. So that's a good chart. That'll play. Thank you, sir. What else do we have here? Oh, somebody mentioned. Oh, here's one, GWG. Have we looked at this yet? I believe so on the intraday. Anyway, yeah, we covered this for our traders. This one is that one that went from 2 days, so really good range on this. And again, may have good volatility if we look at it for plays coming up. If you look at the 1-minute chart, you can see this to this one. Now, notice please, remember I told you guys that ranges count. Now, what is a professional? I used to be a statistician for Ford Motor Company, so I'm a hardcore numbers guy. I'm about charts. Now, in manufacturing, we use what's called control charts. Look at process capability, CPK. We're trying to reduce variation. In the market, we're looking for increasing volatility because that's how we make money. So just a tip there. Anyway, what do you notice? I instantly notice ranges are identical, right? Very close to identical. So the range of each little run here before the flip in, that's like the letter M, McDonald's, runs up, comes back down to about the same point. It runs up a little higher, comes back down to the same exact point. So we have duplicate or identical ranges. So the next time it lights up or sells off, we can expect it to kind of cut and paste that over here, right? It's a good professional price action strategy. It's very easy to spot. So from a price elasticity standpoint, that's one of the techniques that I teach in the live room to help equip you with the tools and the technologies and the mental skills to make a go of this. Okay. Yeah, semi. Yeah. No, the range, it's not good enough. No, the range is terrible for this because it's a $300 instrument, but it's only got like 5 points of range. So no, that won't fly. But thanks for playing anyway. Applied Material, it's got more range. It's only $200, like 207. That's okay. And if we look at the breakout potential, the breakout strength of these charts, one of the things you find is you get these dramatic moves, and often, if you're like a lot of traders I work with, kind of scratch your head, is it still worth trading? And oftentimes you'll find that no, it's not. So if it's already done breakouts 2 or 3 times in the last several days, then I'm not going to keep after it because then it's probably stale and it's not going to go as far. But for early in the cycle, something that's broken out just once yesterday, had a slow day, say broke out the day before yesterday, had a slow day yesterday, and today it's starting to take off, then sure, we'll go for it because that's likely to be an even bigger run. So knowing the difference, being able to visually tell based on what I teach you, the difference between breakouts that continue versus breakouts that stall and fade is something I can offer to you as a resource. So good stuff. All right, thanks to you for logging in. We're going to stay here a few more minutes. Let me know if any questions or any tickers you'd like me to pull up. I just wanted to highlight this special going through this weekend only, and it's a really good, it's the best deal I've given in many a year, and it's a 2-month membership to the live room, and there's no scanners needed, no software needed, none of that foolishness that other people try and pad the bill with. This is one price, and it's $297, and it's money back guarantee. So if you're with me for a couple of weeks, and for any reason you don't like it, feel free to let me know. I'd be happy to give you money back, and it's through PayPal, so it's all secure and all that. Anyway, so it's $297 for 2 months access, and because I'm eager to get a lot more folks in the room, I'm offering to give a free 30-minute one-on-one coaching call to any of you. So, and if you, all of you who are current members, you can go ahead and hit this offer, and we'll migrate you to that as well, in addition to what you've currently got, or extend your time by this. So feel free to go ahead and order, and I'll extend your time by the 2 months. So, and give you the coaching call. It's a really good deal. Right? Normally I charge like $497 for a 1-hour coaching call. This, I'm giving you a free 30-minute coaching call. It's worth a couple hundred at least as a bonus. And that's for the first 20 traders to register. So go ahead and pounce on that. It's a good deal. If for any reason you don't agree, unlike any other live room, how many other live rooms offer money back guarantees? Not very many. I'm good at what I do, so people don't ask their money back. So that's why I can do that, because people stay, which is good. And I appreciate that. I've got like a 1.6% refund rate lifetime in 25 years. So 98 point whatever percent are happy. So really satisfied. Anyway, so that's something to give some thought to. It's only being offered from now through Sunday night. And I'll tell you what, anybody who orders if you order in the next 60 minutes, I'll give you 2 30-minute coaching calls. And that's a real hell of a deal. It's the best offer I've made. I've got an expensive friend to take care of. So that's why I'm offering this, because it's going to help get her some playing. But anyway, so if you do order in the next 60 minutes, that's it's 9:25 local time here in California. It's by 1 o'clock Eastern time. I'm sorry, 1:30 Eastern time. I'll give you 2 30-minute coaching calls. And that's a lot of my time. And it's very valuable. I mean, think of how much, we haven't even been here for 30 minutes. Look at all I've covered. Imagine, me virtually looking over your shoulder. You can show me charts, or ask me to pull up a chart, or show me some of your trades and ask my advice on what I could have done differently, Ken, to either leverage into it and made more in the trade, or should I have traded that instrument at all in the first place? And I'll teach you exactly what to do differently in your trade. So that's a very valuable bonus, and it's giving that to you guys. So you get 2 free 30-minute coaching calls if you order within the next minute or 60 minutes, and 1 if you order by the end of the weekend. So good enough time to think it over. And it comes with money back guarantee, so it should be a simple no-brainer, right? If you don't like it, I'll give you money back. So that's it. All right. Well, let's see any other tickers. Oh wow, a bunch of them. Thanks, guys. No, all-time highs are good, Matt. The trick is on ATHs, do the second. A really smart question from Matt. Do we not trade all-time highs? No, you don't. Do not trade all-time highs. That's usually not that's usually a miss. Trade the second all-time high break. So let's say the previous all-time high is 30, and today goes to 30.3. Well, you don't buy. Wait until the second breakout to a new high. That's the second one, because the first one's often a ghost, or it'll be a fade or a flip or head market maker, head fake or whatnot. But the second one, so let's say it goes 30, 30.3, and eventually back down to 30.1, and it goes 30.5. Okay, take that. So the second high, that's the one to do. Hey, Matt, saying thanks. Mr. Ken, so happy you're back in action. Well, I'm glad wow, all these tickers. Thanks, guys. I got a bunch of them here. Thanks. I very much appreciate you guys' participation, because I like to see these charts too. The neat thing is, once you know how to really trade and you own the knowledge, it's just a matter of application and leverage, right? That's why I run this business. I mean, I can do really good leveraging my knowledge by being here and doing this kind of thing. So, see, KWeb, FXI, INQ. So thanks, Tony, for that. Damon, INQ, and CLSK. Let's see. All right. Let's see. Wendy's, IBM, and PLTR. Hey, Wendy, how you doing? Good to see a familiar face. Hope you've been well. Good to be back. KTCC. Thanks, Trader. These are all tickers that folks are asking for ideas from. Okay. Hey, Damon. Yeah, I heard from you. Yeah, I'll send you a link. Yeah, I'll send you a link to these. Thanks. All right, let's take a look at these charts. So what do we have that's new? CLSK. Yeah, that's a good chart. Yeah, for a swing trade, I wouldn't buy until it breaks the 10. Or a day trade, yeah, it is day tradable. It's got plenty of range. It's got 70 cents of range, so yeah, that'll play. We go to multi-month chart. That's definitely a don't trade, right? This is a kind of chart that trading accounts go to die in. Or you do not swing trade charts that are all over the map. You swing trade charts like this. If it's going like this, you don't swing trade. If it's going like that, you really don't swing trade. So straight up, you don't swing trade. 45-degree angle, swing trade. Get my buddy Harry Boxer's book from thetechtrader.com. He's the only other guy I recommend for active trading, profitable day and swing trading. Harry Boxer is absolutely brilliant, and his book is the best in the world on breakout charts. If I were to put out a book, I would want it to look like that one. So you did a great job. My two favorite books in the world for traders: Harry Boxer's Profitable Day and Swing Trading, and Steve Nissen's Beyond Candlesticks. Those are my two favorite books. And of course, The Disciplined Trader for the mental stuff. Anyway, so that's a hard no for a swing trade, but a hard yes for intraday, right? Because it's got the range and the volatility we're looking for. Good chart. Okay, let's see. INQ. I'm going to assume that these are questions about swing trades. I want to start by looking at the swing trade. I'm going to ask about FXI. No, I don't like the lack of consistency in it. WWW, nope, it's a pullback. ETS, no. PRGS, no. DTCR, no. Tiger was pretty hot for a while there. That was a good cheap one. Tiger, remember that one? I called it. I nailed the calls from 10.6. I went all up to 14. These are actual, by the way, in the live trading room, this is for the first time because I use a new charting software. I type the entry price on the chart and it stays there. So whenever we flip back and forth between the charts, you have reference. You can visually see like you can see right now, the tickers and where I placed the alert. So really good for breakouts. Anyway, that was a TIGR. Well, I've got already two orders. Thanks to those of you who ordered. Again, the first, what was it? The first, what did I say? Anybody who orders within the next hour will get 2 free coaching calls with me. Okay, two half-hour coaching calls. It's meaningful, right? I don't sit there and just talk. I listen to you. We have good, intelligent conversation. I say, well, so if I understand you right, Joel, you're saying that you tend to get shaken out right when the market opens. So, and you've tried waiting until say 9:35, 9:40, and you still get shaken out. Well, let me see what you're trading. And then I'm like, well, of course you are getting shaken out. You're trading the wrong kind of charts. Take a look at this one instead, right? And give a better chart. So that type of stuff. Happy to help you with that. All right, traders. Let's get back to that. It's been a real pleasure being here with you guys. I'm here to help. It's a big puzzle. That's one thing I love it. Wow, I love this chart. Kevin's in Biohomans. That's actually really, really good for a bounce because you may get a squeeze. By the way, short squeezes are just as good as breakouts or whatever for longs. Right? We're just looking for price to go up. We don't have, that's probably a lot of short covering. Now, a short squeeze is kind of like a domino when they start to see, uh-oh, they're starting to cover it. Well, so that's actually probably a really, really good chart for Monday for a pivot to the upside. So between 2 and 4, that's how to trade that one. Between 2 and thanks very much to the trader mentioned that one because it came from on high from down to 12 all the way down to near nothing. And now shorts are covering. Again, this is not something for a long-term investment. It's a short squeeze play. You might buy it at 9, sell it at 10. Buy it at 9, sell it at 3. Buy it at, well, actually 9:30. Buy it at 9:40, sell it at 9:50. Not a swing trade, but a really good intraday. So we'll cover that one on Monday. Thanks. Good charts. Okay, what else do we have here? Okay, thanks, Ray. Yeah, saying, hey, Ken, I want this deal. I'll call. Yeah. A visual statistician. Yeah, I'm very much a visual trader. That's why I love trading ranges. Ranges are everything, right? You've got a big extreme range, you play it, right? It's a little tight range, you don't play. I'm always looking at where is a favorable, it's like going to a casino. Where's the only way to make money in a casino? Well, playing poker against people who suck, right? I mean, I won my first championship 7 years ago. Playing poker is the only way to make money in a casino with some consistency, right? I mean, it's fun to play blackjack at midnight at Bellagio. And everyone's saying, bust, bust, bust to the dealer. It's kind of fun, but make money, that would be poker. Anyway, poker in the front, liquor in the rear. Let's see, what do we got here? KTCC, KWEB. KTC, yeah, that's good. KTCC, I like it over 6, right? Now, it peaked at what, 6 and change. I want to get over that, so maybe 660 might be a trigger on that one. But yeah, it's a good chart. That'll play. KWEB, yeah. That'd be for day trading. This one I would not swing trade because the range is extreme. That's perfect for day trading. Really good range. So thanks. Yeah, big turnout. Wow, I mean it's beautiful. That's a wonderful chart. That's an A plus chart. That's really good. It's a beautiful thing. So yeah, any new high makes sense. I mean that's a good chart. Yeah, with maybe $5 trail stop. But yeah, it's good. See, that's what winning charts look like. They go up. They don't go up and down. They go up and down a little bit, but they go up more than they go down, and they've got consistency. It's a good high integrity chart. You can see it's got higher highs, and people are enthusiastic about buying IBM ever since last June. From June, it was 160. Now it's at 230. So it's gone $70 in just a few months. So that's a great chart. That's brilliant. Well done. It's a good chart. I like IBM. That chart says buy me, right? That doesn't say sell me. That says buy me. What else we got? I'm curious about how Costco did. Let's see. I'm just personally curious. Anyone else go to Costco? I love Costco. $5 chicken. Wow, it's 900 a share. Can you believe that? Costco is freaking 900 a share. Last time I looked at it, it was like 700. Now it's up to 900. Costco was 500 a year ago. Now you could have almost doubled your money in Costco. It was 500 back in June, and now it's up to 900, right? So really good chart. Now I would not buy this because I think that's pretty extreme. It's almost doubled. So congratulations, Costco investors. You've got a huge ROI on that investment with Costco nearly doubling this past year. All right, we're out of time, folks. I need to boogie. I like to be on time. A PLTR, another brilliant chart. Well done. Looks good. I see no objection to that one. Range is good. Price action is perfect. My trader, I'd buy 45 and a half or so. Hard stop, I would say 44 and a half. And exit target would be up near the 50. So at least a 2 to 1. All right, folks. Well, I'm going to boogie out of here. I want to thank you so much for spending a little bit of your Saturday with me. I wanted to wish you the best, and hopefully I've got this market thing beat for the most part. I've been pretty good with my alerts. The challenge is leverage, time, focus, attention, energy, patience, and the rest of what it takes to have a high integrity approach. So wish you all the best. And again, that URL is daytradinguniversity.com/summit. And I urge you to order now. This is the best offer I've ever given in my career. It is, because I'm giving coaching calls personal, just you and me. And it doesn't go, it's private, it's you and me private, so it doesn't get posted or used anywhere. You get 2 coaching calls if you order within the next hour. And that's a hell of a deal. I mean, that's worth it for the $297 alone, of course, but that's a full hour with me for $297. That's worth it. And I'm gonna have a lot of people scramble to get that. So the only thing I would ask is your patience. We may have to schedule these into November. Well, they will be scheduled in November and December, maybe into January. Because we have a lot of people, orders coming in. So anyway, that's it. That's my best offer. It's good. 2 months plus 2 30-minute calls for $297. 2 calls if you order within the next 60 minutes. You still get 1 call if you order by the end of the weekend. So with that, best wishes for successful trading. And I'll see you guys on the other side. Take care. Bye for now.